Welcome to this episode in which I will talk about a couple of topics. So first, I will talk about news around NIO stock being downgraded by analysts. Then I will also talk about the news of this week around new partnerships for battery swapping. And I'll also talk a little bit about China's macroeconomic data regarding the inflation print, and stick till the very end if you want to hear my opinion on the Taiwan elections and the outcomes and how this might impact Chinese stocks. Now first, let's get straight to this unfortunate news for NIO stockholders that Bank of America has downgraded NIO stock to a neutral rating and they're putting a 9 USD target price here. The main argument here in headline is, in which I will comment in a second, that there's a lack of growth because NIO is not going to release new models. Now personally, how I view such analyst reports are just additional context as part of my due diligence and not necessarily a leading indicator of where the stock might be, because you may well remember that in the past the same analysts that are now turning bearish have put out very bullish price targets such as 87 USD price targets here in 2021. As we know, that was close to the peak of the stock, and therefore while I respect the work that they are putting in and their valuations and analysis of the company, I'm not sure if it's a clear indication of the stock performance and the market sentiment. And I also think they're oftentimes lacking a deep enough understanding of the stock. And I think in some of these reports there's even some takes that I would not necessarily agree. For example, this one, getting back to this headline here, that NIO has growth issues in this year because they are not bringing out a new model. I would argue that they are missing that. Of course, NIO is going to introduce maybe up to 2 sub-brands this year. It's not necessarily happening this year, but there might be up to 2 sub-brands to be announced this year, and maybe 1 or even 2 of them going into production and delivery. We don't really know yet. That might be even one of the joker cards that NIO can play if they want to. And what I think the analysts are missing here, additionally to the sub-brands, is that NIO will upgrade the current NT 2.0 platform to a so-called NT 2.2 platform, which will bring major upgrades. I think there will be at least as much, if not more, than the Model 3 Highland upgrade to Tesla. And this will be very similar to releasing new models, because everybody will want those new cars with the latest hardware, better user experience, better quality materials, fixed bugs, and so on. I think this is coming in 2024, and this will just work as much as releasing new models, at which I think NIO is now finished and rather on the side of improving the marketing and sales, hopefully. And so it's actually great that the fleet is now in this final stage of that everything is set into place. And there is no platform transitioning issue anymore. Now rather incremental improvements and hopefully also improvements to the pitch and sales story on the operational side. And so what analysts are missing here is that NIO is actually already dominating their tiers, like the segment of 500,000 RMB plus in China and 400,000 RMB plus in China are dominated by the NIO ES8 and the ES6. They're number 1 in this segment for pure electric vehicles. So that is quite an impressive result here for a new brand, beating Porsche Taycan, BMW, here again BMW. That is a tremendous result. In the 300,000 to 400,000 segment, they are still lacking a little bit with the NIO ET5, which I do think, yes, it is a disappointment so far that it's not able to catch the BMW i3 series so far, but maybe in the future, maybe also with this upgrade, there is still room for improvement. So still, if you were just saying that these segments are rather staying as it is, although there is still lots of ICE sales to be converted into BEV sales, I think. Just say it's going to stay like this. There's no major growth going in here. We'll see that the sub-brands that are going to be released are entering the 300,000, 200,000 and 100,000 sub-segments here. There will be some overlap for how they are going to position it. However, this is, of course, where the bigger volume is in the future and where they will unlock new growth. And so I don't really see how there is a lack of catalysts for NIO in the future, even if, let's say the demand of these vehicles is just staying as it is, which I am doubting. I think there will be, with those successful cars established now and a better sales process, there is room for growth even in those segments that NIO already dominates today as a premium to luxury brand, quite unique as a Chinese OEM here. And with that, I'm actually also quite happy that NIO managed to achieve that without having to resort to price cuts. We had this smartly packaged incentive by NIO to scrap free battery swapping for lifetime, and therefore being able to get NIO cars at a cheaper price if you are not opting in getting battery swapping as a package. So I think that was well done. Other than this, NIO has so far not resorted to price cuts. Of course, the pressure is immense in this very competitive field, but I think truly NIO could turn out as a winner here, not scrapping with their positioning as others have been doing. Let Audi use price cuts, let BMW, Mercedes use their price cuts, and even Tesla, let them move into the lower tiers, which NIO still can at a point when they see it's convenient launch their sub-brands at more competitive prices. But for the main brand, for NIO, I would personally really like to see that they are able to hold their pricing and their positioning. I know it might be tough and it may mean lower volumes for a short term. However, now with the equity raise and around $8 billion in the banks, they don't necessarily to panic now and make panic price cuts in order to bring out more volume. Instead, hopefully they can maintain high average sales prices, high margins on that, and that will be long-term profitability in case this strategy can succeed. So I'm personally betting on that. I know it's risky. I know it means short-term pain. However, I think it's the right move. We'll see how this looks going forward. Now, regarding this week's news that we've got new partners for battery swapping, I already put out a little take here on Twitter or X. You can follow me there on _mm85. And well, I said that actually my main takeaway here is not so much about this new battery swapping partnership with JAC and Chery, which is great to see. However, the significance is that they have now officially revealed this new company, which is co-invested by NIO. So I actually made this video, I think 4 days before the actual news broke. So this Zhong'an Nengyuan company is a company that is partly invested by NIO, the energy, the NIO Power company, which by the way is also a NIO company, so fully owned. And the more important part here is that one other stakeholder in this partnership here is a local grid company. And so for me, this is much more about the validation of the NIO energy business with battery swap stations at the core, at the focus, where we now have, of course, the great news that they will build even more, maybe up to 1,000 battery swap stations in Anhui. Makes a lot of sense. And of course, these partnerships on top. But, as I argued in this video before that I made, I think it will ultimately pave the way of battery swap stations becoming profitable right beside power replenishment. And this, from an investor point of view, will also turn the perception that battery swap stations are a liability and a burden in terms of the R&D and investment. Instead, it will quickly become an asset that you want to build out as much as possible because it will have immediate returns with the vehicle to grid as well as the battery station to grid balancing and those operations where NIO can earn some money. So ultimately, we might end up with a situation where NIO can, without cost, build more battery swapping stations and could have an advantage over conventional superchargers in terms of the cost actually related to infrastructure build out, which would be, quite the flip here in a narrative. Regarding Chery, I didn't have them on my map actually, because I'm not aware so far of them being very much involved into battery swapping. It's quite interesting because Chery is also a partner for Huawei for building the Luxeed brand, and they also have very interesting EV platforms. So very powerful that NIO managed to close them as well as JAC. So this should also put a lid on the narrative that NIO was forced out of the JAC-NIO partnership. As I described before, I think this was a move by NIO on their terms, that they said they're going to buy additional factories and the license along with that, and then going to buy out the JAC plant. That's happened. I think it's not because of some problems with the NIO-JAC partnership, and that is now kind of also validated by the fact that JAC is going to do this partnership for NIO for battery swapping. And again, JAC is also a Huawei partner for a new MPV. So it's interesting that NIO is managing to closing all of these state-owned enterprises like Chang'an, now JAC, and so on. All of partly some of them who Huawei is also collaborating with them for making new models and selling also their platform, their EV platform. So it's quite interesting where this might be going, and in my point of view, the right move to first focus on these state-owned enterprises, because they also have all of these joint ventures, sometimes in collaboration, for example, here with Huawei, but also their own brands. And once some of their millions of car sales will also be sometimes on the battery swapping platforms that they are developing with NIO, then this will also force additional pressure on all of the players in China. And that is kind of the long-term game plan here by NIO, it seems. And they're managing to get these partnerships done, so it's actually working. Now on to the news of some macroeconomic indicators here. We had the China inflation print, which was slightly deflationary, pretty much in line with the consensus, slightly off here. But again, we have this major narrative out there that China's economy is on the verge of collapsing and is very much in deflation. If we're looking a little bit deeper into the numbers here, as for example, the CIO of CraneShares, Brendan Ahern, which I previously had on the channel, has done here, you'll see that large deflation parts are driven by collapsing food prices, because there was some issue with the pork prices before, and now they're coming down heavily. Overall, we do see slight inflationary pressure even in some of the subcategories here, and overall my take would be that the deflationary forces that we're seeing here are not so much driven by a lack of consumer demand overall, rather by things like food coming down, because of some of these bubbles are now getting bust here. And overall this should be positive for Chinese households, because if you have to pay less for food, if you have to pay less for oil, for filling up the gasoline tank and so on, then of course you have more money and can actually spend it on consuming on, for example, tech products or cars and so on. So essentially that's not necessarily a bad thing, even though it is deflation if you look at the just the pure inflation deflation reported numbers there, right? But I think it makes sense to look a little bit more deeper, and in my point of view it could actually be to the benefit of the Chinese consumer here, which has enjoyed more money in their pockets. In fact, the Chinese consumer are actually saving kind of record numbers, especially in comparison to the US currently. Also, the export figures for China have exceeded the expectations, so there's also some upside to see here. However, of course, in general, I think there is still the global economy currently working through the aftermaths of all of the COVID bubble in terms of stacking up goods, the monetary excess cash, and the Fed fighting some of the inflation, mainly in the Western countries, where China doesn't have this issue. And possibly at some point this fight might be over. Currently the narrative is that the Fed is not going to cut rates as soon as people were expecting, but I think the overall topic should be that inflation, the issue might be dead soon. And hopefully this could also limit some of the outflows of the investments by foreign investors into China, because now possibly the dollar will reverse and also the arbitrage in rates between the US and China will somewhat stop to increase. Now on to the topic of Taiwanese elections, and I've got asked this question a lot in my Patreon. By the way, I'm currently not as active on YouTube, so if you want to have daily takes, if you want to ask me direct questions, feel free to become a patron. This helps to support this channel, and also the Patreon network is a place where I'm active daily and answering your questions and providing daily insights still. And regarding the matter of tensions between Taiwan, China, and the US, I have to repeat myself. I'm looking at this as a somewhat of a worst case scenario, which I think that a hot war escalation is rather unlikely. I think the outcome of this event over the week is kind of in line with that. I think we will not see some sort of a war break out over the outcomes of this election. In the contrary, I think a war has become more unlikely. Regarding the results, the leading party has become re-elected in those democratic votes in which the Taiwanese basically stated that they support the independent movement of Taiwan, which this leading party, the DDP, is currently standing for. However, we also need to recognize one of the facts that is oftentimes not being mentioned in Western media, that this leading party has dropped from 50% of votes now down to 40% while still winning, but also now not having the lead in the parliament anymore, where the Kuomintang, the KMT, is actually having one seat more now. So there are different takes here by commentators out there. Some say, well, this will be increasing tensions because the DDP is still in the front seat and the Chinese leadership will not like that. And then there's others who are saying, well, the outcomes are in the favor of the mainland China, because now there's kind of this situation that the parliament is not ruled by the major party anymore, and so it will be more tough for them to, follow on with their agenda. Overall, my sense is that people on both sides, but in particular in Taiwan, they want peace. They want just to be quiet and focus on some national topics like the economy, like jobs, and especially the young voters have put the emphasis on that during this election, which, by the way, even saw a drop in participants of voters. So it's down -3%. So it's not really a kind of an election that is a vote of destiny, how some of the media has portrayed it to be. The most likely result is that everything will be just like it is, and it really depends a lot more on how the US is actually going about that. We saw now one statement coming out, I think by Biden over the weekend, was also saying that the US is not supporting the independence of Taiwan. I think that's kind of the status quo reiterated. Although we have to know that the Biden administration has been the most confrontational. And so we'll see with the elections in 2024 in the US, although, of course, there is bipartisan support against China, going hard against China, but still maybe a possible successor to Biden will be now looking more towards a less confrontational approach towards China and this Taiwanese situation. Because again, coming back to my personal take, a hot war in this region between Taiwan and China, between China and the US, nobody wants, no side actually can win. There are no winners, and it would be a catastrophic worst case in which trillions of economic productivity would be wiped out. Trillions would be wiped out from the stock markets as well, in Chinese stocks, of course, but also there would be no Apple, there would be no Tesla in China anymore, and all of this would be devastating. So I just hope that all of the sides can prevail a cool head and, find ultimately at some point a solution in a peaceful manner. Whether or not that is that the Taiwanese decide that they want to kind of align more with the West, or actually a homecoming to the mainland at some point. It's ultimately for the Taiwanese people to decide. And I think from the Beijing side, they're playing the long game. They think they have chances to reunify the country peacefully. I'm not putting any probabilities on either outcome. I'm just saying that I think and that I hope that a hot war is unlikely, and ultimately it's not playing too much of a role in my personal decision of investing in the stock markets overall or Chinese stocks in specific, because I just think that it's just a super binary outcome, and it's either lose it all or a preservation of the status quo, which we have now after this weekend, in my point of view. So we'll see whether or not we'll get some sort of a relief in risk assets, and particularly Chinese and emerging market economy assets. Maybe investors have been quite conservative and waiting for the results to come in for the Taiwan election and inflation prints, and lots of money has possibly been allocated to hyping up the Bitcoin ETFs and front running this, which now also got quite a bit of a setback, which I think is normal to see as well. And so we might see a normalization in the next couple of days. However, of course, they could also play us the other way around, and the shorts could, of course, try and pressure stocks even further and play their game and try, for example, to bring NIO below the $7 mark, which I personally think it doesn't mean anything in the greater picture. Ultimately, in my point of view, NIO is here to stay currently with this cash balance in particular, and in my point of view, if they can manage to achieve their goals and plans over time, my personal stock price target that I always had in mind was around $40. When and if we're gonna get there, again, I don't know, but I'll make sure to cover it here on the channel. And so I hope you'll subscribe to it, you share this video, and you give it a like. Thanks for watching, and see you in the next videos.